our Brian Cheung had been set to go out west. There was a whole thing planned, not just for the conference, but surrounding the conference that has now been put on hold. So as we talk about his personal disappointment, we should also talk about what it means that they did this, right? That they took it all virtual. I mean, what does this tell us about the Fed's concern about the Delta variant and how that's going to inform their forecasts?
Well, as you mentioned, Julie, I had everything packed, but that doesn't mean I'm not going to whip it out anyway, even though we're still in a virtual format. So I've got the big poofy vest on anyway. But as you mentioned, the Federal Reserve pulling the plug last minute on its plans to host its annual Jackson Hole conference in Wyoming. They made it a virtual format. That means it's going to be the second year in a row that central bankers will be meeting online. And of course, naturally, you want to read the tea leaves to see, does that mean that the Fed is going to be a bit more dovish because they're concerned about the Delta variant, which they said was the reason why they wanted to move the format virtually. Now, for what it's worth, it wasn't just the Fed's decision. They attributed a change in Teton County in Wyoming. They had actually moved to a red or a high risk with regards to the Delta spread, which spurred the Kansas City Fed to ultimately move the format. But none of this is going to change the fixation from markets on whether or not there's going to be any sort of taper talk coming out of Fed Chairman Jerome Powell's speech that's going to be happening on Friday at 10 a.m. Eastern time. Now, when you take a look at the calendar for how the Federal Reserve could approach a possible taper, you can see that there's only 3 more policy meetings for the end of the year. There's one in the end of September, one at the beginning of November, and then one in the middle of December. And when you take a look at those FOMC minutes, which cover the July meeting that we got last Wednesday, you can see that most of the participants on the FOMC did feel like a taper was coming sometime this year. So the question is, which one of those 3 policy setting meetings, by the way, this week is not one of them, will they ultimately decide on announcing a taper? Now, the likes of Dallas Fed President Robert Kaplan have said they should do it as soon as the Fed's next meeting in September. But it seems like based off of the commentary that I've been reading, that something would be a little bit more likely to happen in the first week of November. And that's likely because the Fed wants to balance the risks of the Delta variant and see where they are past September, which would kind of take September off of the table. And even Dallas Fed President Robert Kaplan himself saying last Friday he wants to be, quote, agile and open-minded about the risks of Delta, which would be a little bit of a half step backwards from his more hawkish view that he could see something happening in September. So it seems like unless Fed Chairman Jerome Powell would have offered some sort of surprise on Friday, it seems like at least for now, the markets are expecting something in early November as an announcement, guys.
All right, let me just follow up on that. Why would they even signal any form of taper coming at any point this year? Just the fact this meeting has now been virtual, doesn't that hint that they're placing more emphasis and more focus on what's happening with the COVID variant?
Well, certainly the downside risks have been more elevated, even just over the last week or two, compared to where Fed officials maybe were when they did convene in July. So that could indeed be a factor to say, yes, even though the Fed, most of the Fed committee had felt like they were ready to go sooner or rather than later in July, that things have dramatically changed since that point in time. But we have to keep in mind that when we talk about the level of accommodation right now, there's a good kind of contingency within the Federal Reserve, particularly among the likes of, for example, Boston Fed President Eric Rosengren, who have argued that even if the Delta variant were to try to slow more economic activity, how would increasing the pace of purchases do anything to help that? If you are talking about the original idea of quantitative easing, which in the depths of the pandemic was to make sure you were greasing the skids, if you will, of the U.S. Treasury and the agency mortgage-backed securities market, neither of those markets are really all that volatile in response to what we're seeing in terms of the COVID spike, right? Unless there was some sort of big market reaction to some of that, at least for right now, the Federal Reserve doesn't necessarily see its plans with regards to asset purchases as critical to that. Interest rate hikes might be a little bit more of a sensitive pass-through into financial conditions, which is why I think the Fed is going to be very careful to try to separate its approach to quantitative easing and its asset purchases, and then interest rates, which would happen way farther down the line compared to now.
And Brian, just want to mention something that's been sort of hanging over Jay Powell, and that's whether he's going to have a second term, get a shot at a second term as Fed chairman. He got a powerful supporter over the weekend in the form of Janet Yellen. How significant is that going to be?
Yeah, well, it's not a explicit voice of support because we didn't actually get a comment from the Treasury Secretary herself. But this is coming from a Bloomberg report saying that sources close to them are saying that Janet Yellen does support Jerome Powell for renomination. Again, the timeline is such that his term as Fed chair expires in February of next year. So the Biden administration is going to have to decide relatively soon about whether or not they want to renominate him or put someone else because they have to go through the Senate confirmation process yet again. Now, when it comes to the kind of timing for all of this, of course, it's unlikely that the Biden administration will want to announce anything before the Jackson Hole meeting. Obviously, the speech that we're going to get from Jay Powell is on Friday. But there's the sourcing from Bloomberg saying that we could get announcements sometime around Labor Day. And that is kind of consistent with what I've been hearing down in D.C., which is that some sort of September announcement from the Biden administration would be likely. Now, of course, whether or not that's going to lean towards Powell himself or maybe for an alternative. Again, there's been speculation that the Biden administration wanted to replace him, that they would put up someone like Fed Governor Lael Brainerd, who's already inside the institution but has a little bit more of a track record in terms of being more hardline on financial bank regulation in addition to climate change related issues. Now, whether or not how the Biden administration is leaning one way or another remains to be seen. But it seems like if it is indeed the case that the Treasury Secretary and former Fed Chair Janet Yellen does support him, then that could probably thumb the scales in his favor.